following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 16th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we'll go take a look at the circumstances of the markets that we trade. We'll go see what the bulls and the bears are doing, the buyers and the sellers. I'm absolutely grateful for your presence here. And, of course, I'm here to serve you. So feel free to dial on in, 877-927-6648. Of course, you can call us internationally, 727-445-1044. You can email me, steve@tfnn.com. Be happy to try to get to everything that anyone is asking for. Actually, no emails that I saw here from last night. So we're good to go, and we'll just kind of surf around the screens out here. Of course, inside the den, you can always post a request as well. It is Wonderful Wednesday. This is, of course, which I love, the Hotel California. You know, because once you check in, you can't check out. Of course, that's sponsored by Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 109 points at 16,708. S&P's up 14 at 1992. NASDAQ Composite up 19 points at 48.79. Russell 2000 up 7 points at 11.73. The DAX finished up 39 points. The FTSE closed up 92 points. Not a bad move there. Goldilocks up 19 bucks right now. She's trading at 11.2160. Silver's up 58 cents at 14.90. We've got light sweet crude up a couple bucks, $2.40 to be exact, trading 47.01. So we'll have to go check in on the commodity sector. Leading the charge to the upside here, you've got Intercellular Therapies. They got a good phase 3 test results out here. I believe that is to deal with schizophrenia. Looks like a schizophrenic stock. Up 71%, up 18 bucks as we speak. You've got SAB Miller PLC. I believe that is part of the group that's taking a look at taking over. There's Anheuser-Busch InBev deal that's out there, so that's a 20% move. Molson Coors Tap, you got to love that. I like that ticker symbol. Up 13%. Baidu's up 7.5. Tesla's up $7. Concho Resources up 5. C-Trip up 5. Valiant Pharmaceuticals up 5. To the downside, what do we have out here? Individual stocks. FedEx off $6.75. Cracker Barrel taking a break. That's off $4.83. Chipotle down $4. Serona Dental down $4.70 as well. Okay, so where do we begin as we take a look at these markets? Let's see. Let's start off by taking a look at the summation index out here. Whoa. There's something. In any event, that's on my own system. Thank goodness you guys didn't hear that. But as we take a look at the New York Stock Exchange, now what I need to do here is let's go adjust the this chart. We can see right now the reading, if you're taking a look at my panel in the left-hand upper panel, the little here, I'll just move it over here to the right. That way you can see it. And that shows you where we're at. Right now, you've got the New York Stock Exchange trading at 10,173.79, but you've got the price oscillator 142 and change out here. So let's go ahead. What I want to do is just edit this chart here and add back that little trend line. Let me see where it is that I put that out here. It should be, is that it? No, that's not it. Is that it? No, that's not it. Should have done this at a time. Just give me a few moments here just to flick the switch, so to speak. If not, we'll just have to go ahead and type it in ourselves. I just hate to have to do that. I've got the work already done, right? Isn't it right there? Huh, that is so odd. Maybe I'm not on the right spot. Should have done that ahead of time. What I'm looking at, folks, what I'm trying to get to is when the price oscillator, we'll go take a look at what the net advancing issues looks like today. Very weird. And what I'm looking at here, and I'll do this during I guess I'll do this during a break out here. But, oh, there we go. I found it. Okay. I don't have to do it during the break. I can do it right now. I'm going to go ahead and turn off the minus sign. Okay. What I'm looking at here is this yellow line going across my screen that says 150. Now, we're not there just yet. And I don't know if we're going to get there. We can. But let's go take a look at what net advancing issues are, and then I'll go ahead and get back to my my train of thought here. So you've got advancing issues are 2293, declining issues 716. So we're dealing with a 3-to-1. It can't get better than that, but that's a pretty healthy day. So you can understand the market participation here with regard to the move up. Don't let anybody try to sell you short or anything. This is a pretty good move to the upside when you take a look at market breadth. Now, if the market breadth gets even stronger than this, I don't know whether it'll get stronger or weaker, but if it gets stronger than this, let's go with what it is that we know at this moment. Let's come back to the summation index. It can push that price oscillator up and into the 150 range. Now, when you get to 150 and above, if I go ahead and pull this back out here, 150 and above, last time that the oscillator was out here doing that it got up, actually got above a 150 level, was actually back here in October of 2014. Remember that huge move off of the bottom? Now, it got above that 150 level pretty quick. We were down at now as the market back in October was making that significant bottom out here. We saw price moving lower, and yet we saw a rising bottoms price oscillator below the zero line out there. If you ever see that, and people are scared as all you know what you can do is you can step back and you can be calm and you can say, there's a bottom that's forming out here, because that is the absolute signature of a bottom. Now, to where it's going to take you to, then you've got to do some additional analysis, one day at a time, one step at a time. But it didn't take long for the price oscillator to get above zero, which it did on the trading session of October 17th. And then on two trading sessions later, October 21st, because we had a weekend, the actual price oscillator got above 150. Now, when you get above 150, odds favor. You're going to ask me what the odds are. It's like 90%. Odds favor that the market is going to move higher. It gives you the promise that the market is going to move higher out here. Now, and so in the New York Stock Exchange, which gets beat up every now and then, that's its message. Now, we're not there yet. Last time that we were up towards this level, didn't actually get to 150. That's how important it is for it to actually get up and over that 150 level. July 14, 2015, as an example, the price oscillator reading at the end of the day, and that's what it's really important to do, is take a look at this reading at the end of the day, 144 and change. 2 trading sessions later, back at the high on July 16th, 148.30. Never got above 150. It was flirting. Hey, it's flirting this time with that 150 level. If it doesn't get over it, does it mean that we're going to end up with the same type of decline that we had last time? No, not necessarily. That's not how you would read it. But what you and I want to be paying attention to is the move that is underway right now, which was to be anticipated. Now the question is going to be just how high can this go? So one person might take a look at the New York Stock Exchange and say, Stevie, what the heck are you even talking about? It hasn't even taken out the swing point from August 28th. In fact, the low is 10,180.24. Have we even gotten up to that level? We're only at 10,173. No, we've only gotten up to 10,175. Don't let that fool you. Don't let that fool you. We can go back even further inside the price oscillator. Here, if you come back to the time before that where you got above 150, you can go back to February 13, 2014. And trust me, back in the February 5th level, everybody thought that the world was coming to an end back then as well. And that led to higher price. Now, there was a top that actually formed. Remember at the bottom, you and I took a look at that price oscillator making higher lows below zero. Well, Above zero, we had lower highs. So that was an indication that there was an impending top. To where it's going to pull back to, then you've got to use a whole set of tools and estimations and stops and be able to plan your trades ahead of time. The time before that, where you got the price oscillator just a smidgen above the 150 level, that was back in December 24, 2013. That led to higher price for a number of days out there. So that's what's going on when we take a look at the New York Stock Exchange. I think that's probably the most important oscillator for us to be paying attention to today. Not that the others. So, example, in the NASDAQ composite is above the August 28th swing point, that high out there. In fact, the NASDAQ composite, if we just come and we just do just simple trend lines out here, here's where the composite's next move is likely going to head to before it provides us with much of any information out here. I'm just using the swing point low from May 6th, which nearly touches that hammer candle from July 7th out there. It's a price point of 48.88. So in combination with the New York Stock Exchange, you want to watch this 48.88 level inside the NASDAQ composite. Could be resistance, should be resistance. But if its price oscillator, which is down at 51.50, actually gets above 65, that too will then go ahead. I'll assume at that stage, New York Stock Exchange would be above 150. The NASDAQ composite, its level where it says it's got a promise, the fulfillment of higher prices to come would be its message. It's not there yet. It's at 51.53. Price-wise, watch the 48.18.17 level out here. And inside the Dow, I should know. I think it's 2.65. I think it's 2.65, if I am not mistaken. Let me do this here. Let me see if I can find that. I got the bottom. There we go. Here's the top. No, it's 2. Yeah, it is. Son of a gun. The move, it's only 100 points today out here in the market. It may not seem like a whole lot. The last time that we had its price oscillator, the Dow that is, getting above that level where there's the promise of higher price took place on July 13th out there. And price moved higher, not substantially higher, but it moved higher for 2, 4, 5 more trading sessions out there. Let me go back a little bit further. The NYSE is the one that is the better of all of them to track. But look, the bottom line is, you take a look at these price oscillators. They are very important tools to help us understand what's going on in the market. Look, as an example, last week on Tuesday, Wednesday, I can't recall which day it was, Tuesday or Wednesday, we got a signal go short. So my clients and I sent out the message, hey, we're going short. We went short 2 of the indices out there. And for basically 3 days, Wednesday, Thursday, Friday. So I think it was Tuesday that we went short. But on Friday, based on what the price oscillators were doing, based on a pattern inside the VIX, which I shared with everybody at that VIX workshop. Hopefully you had attended it. If you didn't, you can still attend it. You can sign up for my newsletter service. We can get you access to that workshop out there. But I shared with subscribers exactly what was going on, and we had the opportunity, and we took the opportunity to just simply close out those trades. Break even, slight profit for some. And then about a half hour later, because I was doing the show and we were taking a look at gold and the GDX, we went long the mining sector, which has taken off to the moon thus far today. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 95. S&P is up 12. Composites up 12 points out here. Let's take a look at the 30-minute chart here for the ES Mini. Get a feel for what's going on. Now, inside the ES Mini, if we take a look at, and again, it's a 30-minute chart we're looking at. So if we go back to 5:30 in the morning, and that was on September 15th, and we start our little wave count to the upside out here, what you're going to see is the trading session that when we got to about 11:30 this morning, nice big up thrusting move there. We got to one of those seventh wave moves. The very next candle, we did not see a higher high. That confirmed that seventh wave. Now, we've seen price take that level out as if it is in a recycling move. Now, when you see that, when the and I take a look at any different time frame charts, and I watch that seventh wave move get to the upside, and it gets taken out, it says that you're in a real strong trending market out here, that the market's ready to make its next wave count, which really should start down here at this little hammer candle. Let's actually go see where we're at there, because we haven't done that move. I mean, that would be one of the places. But what we can also see that has taken place here, so I would put you in your fifth move. But we can see here right now, as we speak, coming into this 1:30 time frame, we can see one of those price relative strength divergent patterns that is out there. In other words, price has been able to move higher since 2:30 in the afternoon yesterday, and it has been doing it on less relative strength out there. Now, whenever those patterns show up, the hair on the back of your neck should absolutely stand up. and it should stand up because those are patterns either at bottoms or at tops out here that are really worth paying attention to. We've got a little bearish engulfing bear sash candle that is forming right now. So long as in the next 4 minutes we don't see the ES mini close above the open of that prior session. Oh, stop that. That's talking to my computer. That open was 1981.50. We'll have a bearish reversal signal. If we see some additional follow through, that says to me that we will see the ES mini very likely pull back to about the first 1977, but I would have to say 1970, 1971, somewhere right around there is what I would expect. So that would be about an 8-point pullback. So if that comes, and you and I did the same thing with the 10-minute chart a couple of days ago. And I think we did it on Monday, right? You and I on Monday, we actually called the bottom together. Do you realize what you did on Monday when we were taking a look at the show out here? You actually called the bottom using the set of tools that we talk about all the time out there. You know, the tools that I attempt to teach each of you to use to gauge what the market is doing. Take a look at different time frames. So you called that bottom. It's been a heck of a nice move to the upside. Now we're saying we've got, even though we've got this recycled seventh wave out there potentially, we won't have that until we get beyond this price relative strength divergence pattern. Now that's inside the S&P futures. Let's go check in on the other 30-minute contracts just to see what is out here. Now, if price moves above that as well, because that pattern's in place out there. So if price moves above that and you're short, you got to ask yourself why. Maybe you're short from a positional standpoint, which is cool, or maybe you're short and you've got stops in place and that stop hasn't been taken out. That too is cool. But if you are short and you don't have any stops in place, based on what you and I just took a look at inside those prices, and look, I can't guarantee you what's going to happen next. What we can do is decide what's the market telling us now and act. Just as my clients and I did on Friday, we took a look at what the market was doing. We were short. We said this is the wrong time to be short. It's time to close out those positions. And because of the show that I was doing on Friday, you and I went through this. We were taking a look at Agnico Eagle. We were taking a look at other mining equities, got off the show, and those were showing what? That on a weekly basis, we were ejecting swing points in some cases on lighter volume out there. That message was, hey, let's go along the mining sector, which is what we did. And in these markets, especially these markets, right, where the S&P is off about, what, 2%, 3%, something like that, even with the move that we've had here recently since the open on January 2nd, 2015. These are markets that have been giving and taking, and you have to be ready to take action. And when the message of the markets is to take action, don't hesitate. Just absolutely go ahead and do that. Now, I mentioned we would take a look at the other 30-minute charts out there, and that would take us into the Dow futures. So in the Dow futures, coming off that same time frame at 5:30 in the morning here on September the September 15th, I believe it was September 15th. We haven't made it to that seventh wave count out there, only into wave number 6. But it's also getting into wave number 6. We're just letting this rejuice out here with a price relative strength divergent pattern out here. So we've got the same thing that's going on. What you and I would expect here is we would expect price inside the Dow futures. Whoops, I don't know how that line got in there, but that should pull back. If this is a valid pattern, if it's going to work, you'd see price pull back to 16,521 to 16,587. That's going to be like a 60, 70-point move. Don't let anybody tell you that that's it. It's over in the kibosh and the market failed or anything. That's not what the message would be. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Welcome back, folks. Sorry about that little interruption there. I think we're back to live programming. Had a request to go take a look at Facebook and Rite Aid out here. If we take a look at Facebook, I haven't looked at Facebook here in a while. How about that August 24th date when the market cratered? Facebook had gone from a high, not that day specifically, but if we go back to the July 21st level, it was trading out at 99 and a quarter, and supposedly got all the way down to 72 bucks even Steven out there. Let's take a look at what it is that we do know about Facebook right now. As we take a look at Facebook, let me go ahead and get rid of this little gap that originally was out there. If we look at Facebook, here's what we know. Right now, the price of Facebook is right at its TAS market profile for the weekly time frame. That's that little dot dash line that is going across, green line going across my screen that's priced out at 93.26. You're trading out at 93.22. Now, this is a price. Here's where you're going to get into a what I'll call a congestion area. It's where it's a comfort level. You know, it's like sitting back and having, you know, a bag of potato chips or something. I don't know if that's really comfortable for most, but in any event, price is right now back to a comfort level. If we take a look at the gap down on August 21st inside Facebook, that was with 62 million shares. That started off on the trading day of August 20th. The high of that candle session is 94.77. Now we're inside this with light volume, pure and simple. But it stands to reason that as long as we're trading in there, what Facebook really ought to do is target the day prior, which is August 19th. So I would say that Facebook right now is trying to target the 94.16 to 96.10 area. But it doesn't have to do much more movement beyond where it's at right now. And that's what the daily outlook is. That's what the weekly outlook would be. If I actually put this on a weekly chart and we take a look at what kind of volume Facebook had up at its high, it's not as if on a weekly basis, this was the week of July 20th when it got up to 95.85. It's not like we have a high volume high out there that it has to get into. But what I will say, and the bottom of that, by the way, would be 94.81. I think we came up with 94.81. So it seems to stand. It seems to me that that's where Facebook is headed to, is at 94.81 level. So I hope that that helps. Whoever posted that inside of the den had a request to go take a look at Rite Aid. RAD is the ticker symbol. In a prior life, I did business with all of the Rite Aids, as I did with every single. Well, I won't say every single drugstore, but every CVS, every Walgreens, every Rite Aid, and for those of you in Michigan, every Myers Thrifty Acres, by doing all of their photo gifts out there. You know, you take your picture to a photo counter and you get that turned into a T-shirt or a canvas or a coffee mug, or maybe you just need the picture to be redigitized or cleaned up because it was cut or things along those lines. That was a business that I was in, and did business with Rite Aid, mostly on the West Coast out there, but they're in the North, Midwest as well. In any event, you really don't give a hill of beans about that. Let's just go take a look what the stock is doing. So we've got a weekly chart out here right now in the case of Rite Aid. And Rite Aid's swing point high out here, maybe the all-time high, August 3rd. Nah, it can't be the all-time high. It's only $9. It's traded higher than that, has it not? Yeah, way higher than that. In fact, way, way higher than that. Because if you go back into 1999, you know, you're up in the $50 range. So let's move forward to where it is that we're at today. So let's take a look at this. Add more. Let's try to understand some levels of where this is likely to head to, where the areas of resistance are. Now, it is above. In fact, if you take a look at Rite Aid on a weekly basis, notice that the dashed line, the weekly point of control, is closer to the bottom line, the level of support out there, versus the top line, the resistance area. So this is set up from a weekly basis as more of a bullish outlook than anything else. Now, what's really interesting here is Rite Aid on the way down during that decline of August 24th. What Rite Aid did that Facebook didn't do, what Rite Aid did was it got down to a high volume breakout bar from the week that began December 15, 2014, that had volume of 239 million shares. And price came right back to that breakout area on light volume. Nearly half, 116 million shares, 116 216 versus, what did I say it was? 239. So really came back to a breakout area on light volume. This says to me that Rite Aid's going to go ahead and make a run for that 888. And depending on what type of volume as it gets to 879, if on a weekly basis it can move in 879 with more than 92 million, then it's likely going to go ahead and test the top out there. Now, that's what the weekly chart says for Rite Aid. If we go take a look at the daily chart out here, daily chart is showing us what? What's the daily chart is saying? I have to say the daily chart is really showing the same thing, that it wants to go ahead for that August 5th swing point. So on the daily basis, assuming that it can clear 888. So 888 is going to be its weekly profile. We know that that's also going to be down inside the weekly swing point out there. If it can close above 888, which hopefully that's good luck for you, then it's going to go ahead and swing for the fences, which would be the August 5th swing point, which would say it would want to try to get into the 911 to 913 area. And that is what's going on inside of Rite Aid. So I think I got to everybody inside of the Tiger's Den. So let's go move on. Let's go take a look at some other things. Hey, let's go take a look at Goldilocks. Let's get a feel as to what is going on with gold today. So gold right now is up 16 bucks. As long as gold closes above, wish I had that number memorized. I believe it's 1114.40 is the number, and you're at 1119.30. If gold can close above 1114.40 today, you're going to get a bullish signal out here inside of gold. If it closes back below it, it's not anything that's going to show up on my charts out here. It's another thing that I follow. But if gold, well, you got 1114.16. I mean, that'll be fine to go ahead and use that. That's the bottom of the TAS market profile out here on a daily basis. So we'll go ahead and we'll use that way you can follow along as you're watching us at home. So 1114.60 is really important for gold to close above. Now, gold on its surge higher has run into resistance, right? A little bit of resistance that it has, and that's going to be the top of the weekly box, the top of the daily box. Those are priced out at 1126 and 1125.10. So 1126 is what we're going to call it. So that's a really critical level for gold to get above. So we've got two levels to watch inside of Goldilocks. Then we'll go take a look at volume inside of the GLD. And that is gold needs to close today above 1114.60. If it doesn't, it's not a good thing because it will have run into resistance. It will have run into some resistance, and I think we'll go take a look at volume and everything else that's going on out there. That's not a good thing. If it closes above 1114.60, then the next move that you're going to be watching is, hey, and that 1114.60, that's not going to change. That'll be the same thing tomorrow. Can gold go ahead and close above that 1126 level? If it can, what gold ought to do, priced in U.S. dollars, is go ahead and head for that trend line, that little descending trend line. That's going to be the real key. Well, that's going to be one of the keys out here because gold also, and this is what we're going to want to watch tomorrow after the Fed releases. It's after Janet does her speech deal and really what takes place after that and Friday. One of the real questions, because there's bound to be some kind of movement, right? Some type of currency movement, some kind of movement out there. None of us really know what that is. We don't know if the signals we're getting today are signals that maybe somebody knows something that we don't. It doesn't really matter. What you and I know is that in order for gold to really get some legs out here, it needs to clear these descending trend lines out here. The one that I'm most interested in is the one on the bottom. That is gold priced in euros out there. And right now, it wouldn't take much to be able to do that. It's probably got to get above 1010. So you'd need 1,010 euros to buy an ounce of gold. And so if it can get above that, then we're going to have a breakout. I'm not the only one looking at this. Now, most people in the U.S. aren't looking at it, but there's enough that are. And so and just as in priced in dollars, maybe you can do them both at the same time. That would be nice. That's right around the 1150 area. If we see that, what should happen is there will be a wave of orders. There's a wave of orders just nesting above that level. And if those orders aren't out there physically, they're out there mentally, and you will see people jump on the bus out there, and then gold really zooms higher and takes up. Now, we're not there. Nice showing today, but we haven't broken through any levels of resistance. As you and I have taken a look at horizontal levels, just using our TAS market profiles, and now we've got some diagonal levels, whether we take a look at it priced in dollars or priced in euros out here. Now, if we go back and we take a look at what's going on price-wise inside the GLD, let's go take a look at that, the GLD. Let's go see what we've got as far as volume out here today. And the volume so far inside of the this ETF is 3.7 million shares. Now, what the GLD did, and this was one of the things that you and I, when we were taking a look at it last week, what we noticed was that the GLD last Friday was testing the top of the July 24th swing point, which had 11.5 million shares, and it was being tested. It was tested on September 9th with 8.8 million shares, and then 4 million shares on Friday. That was the trigger. We were doing this together during the show. You know, it's probably like right around this time, and by 2:30, 3 o'clock or so, I had sent out a text alert, a email alert to my clients and said, here's the 2 trades that we want to take inside of the mining sector. And that was after in the morning, because we've been following the sector. We had played it off at the bottom all the way up to that resistance level, exited that trade, and we've been waiting for another setup. And even though in the morning's newsletter I said, boy, I don't see that setup. Well, that setup changed intraday, right? It changed by the time we were doing the show out here. That's why we did that. Now, the good thing about the GLD is it looks like it is up above its market profile resistance level. But here's the deal. The GLD, the underlying instrument, is going to be the gold contract. So I'm not so taken by the TAS market profiles inside of the ETF. I would rather pay attention to what's going on inside of the gold contract. So this doesn't change my outlook here like we're out of the woods. Now, volume today, 3.8 million shares. Look, that's some volume off of the bottom. You did 2.9 million shares yesterday, and we did what, 4 million shares on the Friday when we were testing that swing point. So you've got pretty good volume at 147. And, you know, where does the GLD trade to? It's all going to be dependent upon what gold actually does. But so far, not too shabby. Let's take a look at what the SLV is doing out here. So we take a look at the silver iShares Silver ETF. Volume, nice volume today. So you've got wide price spread, right? Make sure you fill in that gap. Gaps are your friends out there. And look, when you're going to be trading a commodity ETF like SLV or like we looked at yesterday out here, don't even pay attention to the gaps, because the gaps are basically meaningless. They mean nada, nothing, zero, zilch. Come up with a few more of those things. They mean absolutely nothing out here, because all they're doing is catching up into the trading overnight of the underlying commodity out here. So we're not concerned. What we can say is at least mentally fill those gaps in to give you some idea with regard to wide price spread to the upside or to the downside. Now, you got a nice little hammer, doji style candle back here on August 26th. Volume today, as I say, 12.3 million shares out here. That was on Friday. It was down with 4.7. So we've got accelerated volume inside of the SLV, inside of the GLD out there. And Peak D says Gornish. Gornish. So what language is Gornish? I am not familiar with that, so I'm going to learn something new today. That's a wonderful thing. Every day, I don't know about you, but every day I strive to learn something new out there. You know, if you're not growing, if you're not, if you're not growing, you're what? You're dying, basically. So it's all about growth. So we're going to find out. Yiddish, okay. Is Gornish, is that the proper expression out there? Bubkiss. Oh, I like Bubkiss. Okay, I like Bubkiss for sure. But I had not heard of Gornish, so I'm going to have to, but I do like Bubkiss out there. Did Jerry Seinfeld, did he used to use who used Bubkiss a lot? In any event, we'll try to incorporate that into our trading technology service that we provide to you each day here from 1 to 2 o'clock. Right now, we got the Dow up 97, S&P is up 12, gold's up $17. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 109, S&P's up 13, Composites up 18, Russell 2000 up 7. We didn't take a look at the ETF structures. I don't know if we're going to get to that. We probably won't get to that this afternoon. But in any event, they're moving higher out here. So you know what we want to be able to do. Let me try to put this in place here. We're watching that New York Stock Exchange. We're watching the price oscillator. It doesn't have to do it today, but at any point that we see a closing above the 110 150 level. Right now we're at 140 and change, just as we were when we began the show out here. If we see a close above that, what that's going to do is that's going to offer the promise of higher price. Now, I still believe, I just look seasonally speaking, and a number of other factors out there. Did you guys hear David Tepper on CNBC? He talked about the outflows of cash. I had intended on, I just got tied up in trading this morning, and I had intended on updating a chart for me, because, you know, there's a lot of people that are like, well, how do you figure that out? And I've got a way to do that so that you can follow along as well. So I'll try to get to that tonight or in the morning, and we'll show you a way that you can monitor the so-called flows of cash out there. That way we can quantify it so that you as an individual can understand one way to look at it. But there are ways that we can understand, because the flow of cash is what's really going to help the markets move higher or lower out there, right? Well, as we speak, you know, one of those flows of cash is going to be the euro Japanese yen. And here's the daily chart out here. We know that this had moved higher over the course of the 5 days from the September 7th up until really September 11th. We saw a slight little pullback. Today we're seeing a move higher out there. So as this currency pair moves higher, this is putting liquidity into the marketplace. It just, this currency pair rules the stock market world out here. So following along what it's doing is very helpful. So it helps and it assists with regard to what the markets are doing right now as we speak today. That's one element. Another element, I like to take a look at the VIX index. There's so many purposes and uses for it. Stevie likes to take a look at it with regard to, now look, as the VIX index is coming down, that's not so much a liquidity gauge. It's when it gets underneath the 50-day exponential moving average. It's not there yet. It is still above that level, which is 2054. So trust me, the bulls are, the bears are still in the woods here. Though the bulls are not out of the woods. And now if, in fact, the price of the VIX can close below 2054, that will be a secondary liquidity gauge. So that'll be a river that says, hey, in the river where things are flowing in both directions, that'll say the river that is flowing with liquidity in the marketplace is flowing in the direction where prices move higher out here. But until that VIX gets below 2054 out there, you know, as Lee Corso would say, not so fast. So I'm telling you, not so fast as well. So we've got to be paying attention to that. Look, oftentimes the market doesn't give us everything that we want, so you have to make some judgment calls based upon, we always have to make judgment calls out here. So that's two levels that we want to be paying attention to. You got that New York Stock Exchange price oscillator. You've got the euro Japanese yen. What direction is that flowing? And then we've got where is price in relation to the 50-day exponential moving average out there. So if we just watch those three things, we'll be able to navigate these markets pretty well. Didn't get a chance to take a look at Lightspeed Crude, but that's moving up nicely today. Looks like that's up a couple bucks. He's trading this daily chart back inside that swing point. I have believed that Lightspeed Crude is trying to make an A to B equals C to the upside. I still believe that to be the case. If, in fact, it can get above the 49.33 level, that'll set up an A to B equals CD to the upside. As far as where that would take you to, let's see if I can get this done here before we have to sign off for, say, sayonara till tomorrow. I can't do it. Oh, well. We'll do it tomorrow. Hey, folks, thanks for joining us here. Stay tuned. Our man David White is up next. Have a great Wednesday. I look forward to being with you tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.